Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon Pre-Market Show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Give you advice, provide you with guidance. That's the disclaimer. And I'm going to share my screen. While I'm doing that, as a note to anybody joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. You could, if you have a question, you can type that question into the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. Click on that link. It takes you over to Zoom. Click on raise your hand. And once we let you in, you could ask your question directly. So while we're waiting for more people to join us and for people to put their questions in, we'll give them a couple minutes. We'll take a look at the pre-market report, see if we could get some insights on stocks that are trading in the pre-market hours, and then we'll move on to the questions. All right, so pre-market report. These are stocks that are trading in a pre-market hours. I'm going to come down here. Nice. We have a list of our most active stocks, biggest percentage gainers, biggest percentage decliners. Here we see we got 95 stocks that made our percentage gainers list, 40 on our percentage decliners list. So from this perspective, right now we're looking like we're setting up for a bullish bias at the open. Okay. And these are stocks that do require to meet some threshold that we set with volume, price move, liquidity to make this list. So we could come up here and take a look at this calendar view. And in this calendar view, we have a summary from the high level, what happened in the pre-market hours that particular day. So we can go back in time and look what happened in the pre-market hours. Here we're on August 24th. That's today. And so far in the pre-market hours, we see that there were 429 stocks that traded in the pre-market hours that traded higher than the previous day's close, and 267 stocks traded lower. If we took the volume of shares trading in the pre-market hours, there was 98.8 million shares traded on up volume versus 63.8 million on down volume. And if we converted that volume to dollar value, because not every share trades at the same price, there was $4 billion worth of stock that traded on up volume versus $714 million worth of stock trading on down volume. So from this perspective, it looks like so far the trading in the pre-market hours is indicating bullish enthusiasm. And if we kind of just look back at the previous days, and I'm just going to take a look at the notional values here. From August 21st, August 21st looked like all the pre-market activity indicated bullish sentiment. August 22nd, same thing. August 23rd, more bullish than bearish. And again, today. And today's, I think, was also driven a lot by NVIDIA. They reported earnings, correct, Will? And
We did, yep.
Gave a better than expected guidance, and analysts and estimates were already increasing a lot. So they look like, they did even better than the optimistic estimates already in place. We could also come back down to this list and doing one more check. when we take a look at this list, we see that there are stocks in there that are low cap stocks. We have ETFs in there. We have leverage products. It could be closed-end funds. Pretty much any security that's listed on a major U.S. exchange, if it's traded in pre-market hours and meets our thresholds, it could make this list. And to narrow it down to a smaller group of stocks, we could use the filters here above. As a reminder, if you have a watch list, you can filter this pre-market report by your watch list. We're going to use this filter here in ETF as an example, and I'm going to click on it. And in here, we get a list of ETFs to choose from. And when you select an ETF, we're going to go ahead and select SPY. The list below will get filtered by stocks that are holdings in that ETF. So the SPY ETF, that's the S&P 500 ETF. So these are the S&P 500 constituents. And we see here that 17 stocks in that ETF that belong in that ETF are up in the pre-market hours, 5 are down. So from the market breadth point of view, it looks like, again, we are setting up right now for bullish bias at the open. That's how the trading is indicating in the pre-market hours. So we gave it a couple of minutes, Will. We're into it. So if you have questions, I'll take the questions.
No questions have popped up yet.
Okay.
Actually, Mike was saying he sold a cover call, and I thought it was in NVIDIA, but it was NVDI. It looks like there are these and I'm not familiar with the products. I don't trade them, but it looks like it's and the SPY. Chuck, another chameleon, has talked about them. There's some sort of income-driven stocks. Have you ever heard of these stocks?
What's that?
And NVIDIA, NVDI.
I don't see it. NVDI. I don't see that symbol.
Excuse me, NVDY.
What's that, Will? You're breaking out.
Sorry, it's NVDY, not I.
Sorry, Will, you're breaking out. I couldn't hear you.
All right. Something may be wrong with my internet. You hear me now?
Like vaguely. Was there a question though?
No real question now, just a comment.
Okay. All right, so let's stay then on the SPY while maybe more questions will come in. We started talking about yesterday the implied volatility and how we measure it. We talked about that a stock itself doesn't have an implied volatility. The implied volatility is derived from an option price that's inputted into an option pricing model. Okay. That's where the implied volatility comes from. And when we look at the option price, there are a lot of prices for different expirations. You have different options. You have different strikes. Then you got bids and options. You have asks and an option. So there's not really a particular option that you could track that you could say the implied volatility is, moving up or down, right? Because the option itself eventually will expire, and every day, it has less days to expiration, and it also the option itself, the strike price as a reference to spot price will change if the stock moves. It could be more in the money. If the stock moves the other way, it could be more out of the money, and there's a skew in the options. So the industry, to track what the implied volatility is doing, we create benchmarks. Okay, certain benchmarks that have to have a constant days to maturity, and there's a constant to its reference to the stock price. Okay, so here, this is a 30-day IV, and it's tracking the strikes that are around the at the money. Okay, the closest strikes that are around the at the money. And the idea there is, if we are able to track an option that has exactly 30 days, 1 month to expiration every day, and the option strike was always the same distance, to the spot price, let's say around that the money, then we could see, well, how much did the implied volatility change from day to day, right? Because we could track how much the stock price changed from day to day. That's easy because the stock price, the stock is this, doesn't expire, doesn't have strike prices, just that's the asset. But with an option, it's a little bit different. So if we had, in theory, we have to create a theoretical, or what we would say is a synthetic option, right? A synthetic 30-day constant maturity at the money option. And then we're doing that through a model that we build by observing the options that straddle 30 days. Okay, so there's a formula to try to get a weighted average of 30 days and at the money. And this is a good example of using models in finance, right? So in finance, implied volatility is not a security driven, right? It's not an observation of a security price that's trading. It's a derived value through a model. That's what we're looking at. It's a model used to derive a value to give us an answer to certain questions. All right. And models in finance are important because there are models out there constantly being built trying to answer questions. So when we look at the 30-day IV, it's important to understand is that we're really looking at a benchmark that is derived from option prices. It's not from the stock. It's not from it doesn't come from a stock. So SPY itself does not have an implied volatility, right? SPY has a net asset value, right? SPY, has holdings. SPY has, a expense ratio, but SPY itself does not have an implied volatility that is coming from the option prices. Okay, so what is the implied volatility? What is the model trying to answer? Well, the model's looking at prices and saying, okay, here are all these prices in SPY, right? SPY, each call has a price, put has a price, and these prices are conveying the market's prediction of something going into the future, right? These are forward-looking instruments. So the markets are making predictions based on their outlook going into the future, right? So this option expires August 31st. There's an option, this is the strike, blah, blah, blah. So this price is a market prediction into the future. But what is it predicting, right? It's hard to say, because if I'm looking at this price, I can't really tell, just by looking at the price alone, it's not enough information what the market is conveying, right? I don't know. I just see a price, just like, price of a stock. If I'm looking at a price of a stock, I don't know what the market is indicating. I need a model to try to model it out. Is the market indicating, 10% earnings growth going out 5 years? Is it predicting 20%? I need a model to tell me that, all right? Because if I look at the price, I just see a price, okay? And that doesn't really give me enough information. So the option pricing model, what it's doing is saying, okay, if we take the option and we run it through an option pricing model, what we could do is convert that price into a daily average implied volatility. So the price itself is saying that the market is implying that if this is the correct price, then the average daily fluctuations, right? If we traded this model, then the average daily fluctuations in the stock must be this from now to expiration. So that's what it's doing, saying that what is the implied volatility between now and August 31st, daily implied volatility, right? So this way, we could start comparing the options, and we have a way to analyze that option. Right now, we could kind of say, well, that volatility is high because we could disagree with it, or we could say that implied volatility is too low. And that gives us a way to put a valuation on that option. Okay. And it gives us a way to analyze the option from the perspective of what is the market indicating, what is the market predicting, what is the market signaling, and we could quantify it, right, based on the assumptions of the model. So that's a difference than just looking at price alone, right? Because if you're just looking at price alone, you really have very little information to go on, and how do you analyze it? So that's what the option pricing model is trying to do, is convert the option into something that the market is trying to signal or predict about their forward-looking outlook, and it's a way that we could start measuring or quantifying how does that compare to what I think about volatility, or about historical volatility. So I think we left it off yesterday. I just wanted to complete it because we jumped to a different question.
That was a great day, D. Robert was asking, would you ask Miss Dimitri if there is a trade to look at with NVIDIA that he would talk about, or has the horse left the barn at this time after the earnings?
There's no particular. The thing is, I could go to NVIDIA and just start looking around, but I don't want you guys to sit through there while I'm analyzing it, because it'll probably take me a while just to familiarize myself with what's going on right now. So I don't have something in mind that I was looking at. If there's something interesting that I was looking at it before, I would bring it up, but I don't. We could just take a look. Yeah, we could take a look at. Let's just take a look at what the market was predicting yesterday. So here's yesterday's straddle. Okay, so yesterday's straddle was implying a move of 9.6% up or down. So that's what this bar is, up or down 9.6%. You could see that this is the third time that NVIDIA is up after earnings. The previous two times it broke right through, broke right through where the market was anticipating. So it was over here on February 22nd, the market was pricing in a 6.6% move. It was up 14%. Then the market adjusted. It was implying a move of 7.2%. The stock was up 24%. Today, so far, you can see the implied move yesterday was indicating 9.6% move. We're up 6.6%. So up, but not as dramatic as we've seen before, up 7% right now. So, let's take a look at what the stock did after it, after reported earnings. Let's just take a look at it. So I'm going to go here on the earnings moves. And these are, the last, I think, 4 years, right? Each quarter, 4 years. And we could see that, historically, if we went the opening gaps, gap down more often than up, except now it's something changed. So this is an important thing about analyzing data and potential outcomes and trades. So what happened here, right? We have this historical data, right? We do have this historical data to look at, but what changed here? Well, so I don't know if Will could hear me, but what changed is that all of a sudden there was this explosion in investments in the AI, right? Which wasn't happening down here. So this is what's happening is all of a sudden there's this explosion of investments in AI chips, with ChatGPT, and this has made a dramatic change in NVIDIA's business. So we could see here since then, it's been experiencing big gaps in the morning, at least the last two, right? We're here 7.1%. So let's just take these, what happened in these 2 days. So here we see that one of the days it continued to drift higher after the open. The other day it drifted lower on this day. And we don't have a lot of data to go off, but intraday, we could see this day to the high and to the low was around close to 2%. So that was like that range it traded in after the open. Here, it had a really much bigger move, so twice as big. So here we see the range to the high was 2.5%, to the low 4.9%. I think that NVIDIA would be, more difficult to kind of come up with a distribution of potential returns, just because now it's in a unique situation that it wasn't historically, right? Like something has changed in the stock and the business, in who's trading it, who's accumulating it, and you have to start compensating for it. That's important because the data from 2020, 2021, 2022 is not really relevant to today's situation anymore, right? Because it had a dramatic change in its, in its business.
It is amazing how that changed.
Right. So I guess I don't know if we don't have any questions, we might.
We did have one more question from Sarush, who was asking about the dark pool section of Market Chameleon.
Yep.
He says we can see liquidity coming in and out. Is there something that would show us if it's better to route our orders in the dark pool?
So so when you have a broker, your broker, not everybody has the ability to directly route it to a dark pool. And I don't know if your broker lets you choose the dark pool to route it to. They might have certain dark pools that they have relationships with that they'll route through. But when we talk about dark pools themselves, it's not the same thing as like an exchange. So anybody can access, the public exchanges like NASDAQ, New York Stock Exchange. You should be able to go directly. Your broker either gets you the best price or allows you to go directly to an exchange. But our dark pool is a little bit different because that is based on, your broker's relationship with the dark pools that they have, and can you route to them or not? So even if you send it to a dark, let's say a dark pool, they're different dark pools. A dark pool is just like a private venue. All right. So it's not like one dark pool out there. It's a private venue. Like, for example, Citadel could have one, Knight Capital could have one, Goldman Sachs could have one, Merrill Lynch could have one. They have their own, right? And they'll have their own liquidity in there. They'll have their own matching engine. They might have their own rules in there. And the people who could access it have to have a direct relationship with those dark pools. So it's not, something I could say, send my order to Merrill Lynch dark pool. Like, your broker would have to have that ability for you to do that. And I don't know if they do or what kind of relationships. Like, I think when we were market maker, there's some exchanges that had dark pool relationships. I think maybe the bats, or they had their own something like that. And we applied to Merrill Lynch dark pool. But the way they operate is a little bit different than the lit exchanges. These are private matching engines, okay, that can trade within certain rules. They still have to have rules in place, and they're regulated, but they're private exchanges, and they don't have to accept you. They say, these are not types of, like, if you're a high frequency trader, or they think that if they think you're detrimental to their other customers or business, they don't even have to let you in, right? Or they could kick you out. And accessing them, it's hard, because even if you send your order, through a dark pool, and maybe your broker's already doing that anyway, you don't even know which dark pools it's going to.
That's great, D. Thanks so much.
Yeah.
We're right up against open and bell. Orange Bull asked one question, and he didn't get back to the symbol, but he's asking, I see that the IV 30% rank, it says subdued. What does that mean? Maybe we can go through the IV ranks, and if it's subdued, or maybe you can explain that tomorrow. Maybe we'll go over that tomorrow, because we're right up against the open and bell.
Yep.
But I'll copy that question from Orange Bull. Thank you, everyone, for the questions. There was another question I didn't quite understand it. You can always email us, support@MarketChameleon.com, and we'll try to get to the questions the next day. Great job, D. Thanks so much.
Yep. Thanks, everyone, for joining. Thank you for the questions. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, everyone. Thanks.